What's up, my fellow traders? Hope you all having an awesome weekend. A weekend update for you guys. And as always, I want to give you something valuable to learn over the weekend. And the reason I do long videos on the weekend, so that after a stressed out week, maybe for someone, or if you have made any mistakes throughout the week, then in this weekend's video, you might learn something valuable, or you might learn something that will help you to take efficient trading decision for your future trades. You might be placing a wrong trade for the next time, or you might be about to take a wrong trade or a trade because of a greed or because of a fear of missing out. But then you might remember, yes, Umar have said something over the weekend's video. This is not, I'm going to do it again. So that is what I want to give you over the weekend, so that it might stuck somewhere in your mind. And when you are about to take your next trade, it might prevent you to take a wrong trade. And that is my goal, to teach you how to take your trades as efficient as possible. And in the second part, we're going to do analysis of natural gas, gold, silver, crude oil, and we're going to go through copper as well. But in the first part, we're going to talk all about the educational stuff, trading psychology, the mistake I've done this week, which is what I'm going to share with you, and how I coped with my emotions and how I managed to come out from the loss and then finally able to get next winning trade. And that trade, the one I did mistake, was a winning trade sent to the members, but for me it was a losing trade, which is what I'm going to talk about in the first part of the video. And if you want to skip the first part, if you're someone who say cut the crap, I don't want to listen to you, and you can always skip it to the second part where you can see all the analysis. For that, you can skip it to the timestamp you can see in a timeline. So let's start the first part of the video. Now, trading is not a very easy business, but I would say it is the easiest money in the hardest way. And if you have a strong mindset, strong trading psychology, strong risk management methods, then no one can stop you to become a profitable trader. That is why after every 2 weeks, I show you our trading performance, the way we take our trades, and how we enter the trade with exact rules. Now, so far, as you can see, till date, we are up 86%, almost 87%, with 76% of winning ratio, with $10,000 balance. Just with the 2% of risk, we are up. And if you're someone comfortable with 3% of risk, then you can see how awesome the gains would be just with 3% of risk, and the total gains would be 153%. So you see how nice the results would be if you just take your trades according to the rules, and why not, you can become a profitable trader. Example is right in front of you. All these trades were sent to the members and the results are in front of you. I'm going to start with a mistake I've done with one of my trades. Now I'm going to show you the trade right here. This was a trade alert that was sent to my members. Now, according to this trade alert, the target has been hit. That's why I've added that in my winning trade. GBP AUD 62 pips. According to that, it is a winning trade, and as you can see right here, that hit our take profit and market then quickly pushed down. That is why very important to have your stop loss and take profit both. And we're going to talk about how you manage your trades in a very short while. Now, this was a winning trade right here sent to the members, but for me it was a losing trade, right? As you can see right here, that hit my stop loss, that I took this trade in my live account. And right here, why was a losing trade? Because I just forgot to adjust my stop loss according to the trade alert I've sent, and I just got a message from my broker that your stop loss has been filled, and I was like, why the hell the stop loss is set? And when I checked, I forgot to adjust my stop loss according to my risk to reward ratio, and then it hit my stop loss and quickly pushed back down. Now, in this type of situation, the mistake beginners do, if they see the stop loss is hit and quickly market pushed back up, they start doing revenge trading, and they start to buy maybe here, and then market push down, and then they are even in more loss. But instead, I stay back, stay calm. I was like, okay, that's fine. Look for the next opportunity. If we have a next opportunity, I'm going to take another trade. So that is how your mindset should be, that even though that hit my stop loss, I did not get angry. And after that, you see, I entered this trade, and how nicely that hit my take profit. And this was a trade I've taken personally, not sent it as a priority group, but that was discussed with my students. That is what I've entered, and this was the trade I took right here. 87 pips target has been hit. I've managed it, till here using the risk management rules I teach to my students in the MMTU course. And right here, I want to show you that was taken in my real account. As you can see, that was a candle where it hit my take profit. Now, according to this platform, because I share that with my students and because I want to share that with you guys, that's why I have a portion of my account balance here connected with my trading view and with C traders, and the other portion of my balance is in my MT4 account. That is why here that hit my take profit. As I split my risk on my MT4 account, my target was up to right here, so that we can all be in the same boat the way I teach to my students. And once you're profitable, only then you can start managing your trade. But gaining the confidence is really important when you start trading. So that is how I took this trade right here in my real account, and that certainly hit the take profit. That is how I managed to enter this trade. And you see, if one was a losing trade, the next was a winning trade. And imagine, after a loss here, I started to do my revenge trading, and if the price pushed lower, and that would be just a hope for me, what if the price will push up? But this hope will do nothing but give me more stress, and with that stress I wouldn't be able to take a next trade which I've taken and which I've made money and made more pips than a losing pips right here. So that is how you need to stay disciplined, stay calm, and take trading as your business. Enter your trades with the rules. Once your rules are met, move ahead. If your stop loss is hit, don't get angry. Now this week, actually I would say from the last 2-3 weeks, we were waiting for the price to come in our zones for the counter trades, and we are still waiting for that. But finally price start to come into our zones, from where we can now start to look for the condition to take the counter trades or trend continuation trade. Hopefully by next week I'm going to show you how the market reacts from the zones as well, as now after quite a while it just came to the levels. But in between that, we managed to take some nice trending trade, pullback entries above or pullback entries below 50 EMA, bearish or bullish. As long as we are not in the zones and we are waiting for the price to come to the zones, we are just taking the pullback trades rather than just waiting for the price to come here. Yes, when the price hit our zones, we look for our entry condition. So hopefully next week we are going to take some aggressive entries as well. And then we have USD Japanese Yen. Now this was a trade we took live in the live session, right? At that time the market already pushed up, and I waited that if the price come back to my level, I'm going to enter this trade again. So I've set my limit order right here, and as you can see, after hitting my limit order, price just pushed up nicely, hitting my take profit. So you see, because the market just pushed up from my entry point, I just did not enter right here. That would be a fear of missing out, or that would be a greed. But after this pullback, I got an opportunity to enter this trade at a right price. That's why I entered here with my buy limit order. You see, with the wait, with patience, with discipline, market came to my point and I managed to get this trade, and this was a winning trade that we took in a live session with my Priority Group Plus members. You see how nicely the discipline played out. Yes, that could have hit my take profit first, and that's totally fine. I would go ahead and look for the next opportunity. I waited. The rules are really important, and my rule is not to enter my trade unless it is back to my entry point, and if it does, then why not enter this trade, as it follows all my rules. Now let's talk about the importance of stop loss and take profit, and importance of managing your trades and get a better risk to reward ratio. Now this was the trade. Let's enter. Remember that, as I've already shown you, as you can see, this market is not in an uptrend, right? It just started its uptrend from here, and it's just pushing up and a little bit choppy, and then we entered right here. So that is why this type of trades, I align myself with my ATR, and as you can see how nicely the price hit according to the ATR targets I teach to my students, and then quickly pushed back down. Now for this one, I did not manage this trade. The reason number one, it is not a very strong uptrend, so that is why I wanted to use a fixed 1-to-1 target. Or yes, if you want to just go break even, in that case you will be out in zero profit and zero loss. But I kept 1-to-1 because it was not a very strong uptrend, but according to my ATR, it hit my take profit. So you see how important setting your take profit is. And let me tell you something funny here. Now there are some so-called gurus out there who have no idea how to set the stop loss and take profit. And the way the system I teach to my students, I have a certain amount of pips we set for stop loss and take profit, and that depends on every different strategy. For aggressive entries, my stop loss rule is different. For pullback entry, my stop loss rule is different. For the other strategies, stop loss rule and numbers are different. Now, I've seen some traders, some gurus, what they do. They don't actually tell the exact numbers of stop loss. I tell the exact numbers of stop loss. And what they do, they just say, okay, we have an entry, right? They mark some zone like this. And you might have seen some screenshots. They put a stop loss like this and they then set a take profit like this. And then they want to show that, yes, the risk to reward ratio is massive. But see, in this type of stop loss, if you do this, it will hit your stop loss again and again. And very important, to set your take profit according to your tested stops and target rules. This is my tested stops and target rules. I know this much is the volume in the market according to my stop loss rules, which I've tested hundreds and thousands of times, and that is why there are so many times when the price hit my take profit and then it quickly back down. And there are so many times when price was about to hit my stop loss but did not hit the stop loss and they quickly pushed back up. Now imagine if the stop loss is a just use a generic terms, with my fingers like that. I know you get it. Like, let's keep a stop loss below the wick. Yeah, this is something you hear a lot, right? So imagine this was your entry and you see a stop loss below the wick, somewhere below the wick. So use the ATR for your stops and target. 2 ATR, 1 ATR, give the exact numbers. So here, as you can see, if the stop loss was somewhere below the wick, that would be a stop loss and then it goes in your direction. But here, as you can see, aligned with my stop loss and about to hit my stop loss, but it didn't hit my stop loss. That is why very important to have to test a strategy. You must know how to set up your stops and targets. If you follow me, if you are my students, stick with that. If you are learning from somewhere else, make sure you are aligning yourself with a tested strategy of stops and target rules. So that is why very important to keep your take profit and stop loss both. Otherwise, your winning trade could turn into losing trades. Now, this was a trade I managed right here. As you can see, my risk to reward ratio was 1.321 in the pullback entry. Now, again, aligning yourself with your stop loss rules. As you can see, the price came down near to my stop loss right here. And at this point, you see yourself in a loss for so many hours. We entered a 4-hour candle, 4-hour candle, 4-hour candles, and right after 16 hours, actually after one day, price about to hit your stop loss. And that is when your patience play off. If you are not a patient trader, if you are someone really scared, you would just exit your trade here in a fear of not to getting into more loss. But after that, you see a nice shoot up. Now, I know people like to blame the noise out there. Some of them will say, yes, that take profit is hit just because a news event happened. But what if it hit my stop loss because of the news? In that case, I will not blame the market that it hit my stop loss because of the major news event. I entered my trade because that follows all my rule. Yes, if there's a major news event, if that fuels my take profit, that is awesome. But if there's a major news event that goes against me, I have my stop loss, I have my protection there. If it's my stop loss, that is also fine. That is why we don't need to blame someone else for your own losses or just because you don't know the full trading method. Because I know the full trading method, I know my rules. I have seen this trending market right here. This was my analysis, a nice trending market, and for that, I want to enter this trade. Doesn't matter what's going to happen. I have my stop loss there. So that is why here I want to manage my trade something like this. And how nicely we had a price pushed up. So that is why if you have a tested strategy, if you're confident about the analysis, then we are not blaming anyone. We are not blaming the news. And we are not going to listen to the noise out there. There'll be people out there telling you, don't take this trade because the market is already at the highest point and they're going to hit your stop loss. At that time, I was like, man, that's my tested strategy. And that has given me some nice badass trades. And every time I see this condition, I will enter the trade. Doesn't matter what. Stop loss is there to protect me, right? Do you see how this trade that could have been a losing trade, and if a strong trading psychology, the emotions did not play out because I was under my risk, that did not scare me that it's going to hit my stop loss. But when I woke up, I've seen on my phone a notification that your take profit has been filled. That is how you make money while sleeping without any distractions. So if you know your rules, if you know your strategy, take your trades. Don't get distracted with the news events, with the major news events. Yes, reduce your risk in that case. If there's a major news event, you know that the market can move crazily, you reduce your risk. But still take your trades if you have your tested strategy. So that is what I want to teach you in the first part of the video, some trading psychology tips that can help you in your next trade. Don't take your profits early and don't cut your trades with a fear that's going to hit your stop loss. And you have seen a good example how nicely that converted into a winning trade. So far this week in the priority group, we took 3 trades. The market is about to close, but 1 is winning trade. 2 of them are still running. Let's see how it goes. And that is how we need to be trading. Don't overtrade. Take some best quality trades, and in the long run you'll come out profitable. I have a plan to do a little podcast thing where I'm going to discuss all my trading journey, how I take my trades, how I do my risk management, how and when you can quit your jobs, and what you need to do in order to quit your jobs. We're going to talk about prop firms, and lots of that I'm going to plan and schedule with the next 2 weeks so that you can also benefit with my experience. So let's wrap the first part of the video and let's start our analysis with natural gas, gold, silver, crude oil, and copper as well. So let's start with natural gas first. So what do we have right here? And price came into our trend continuation zone, formed a bullish engulfing pattern, a weak signal but a valid signal. Let me show you what I've said in my last video so we can understand conditions and entries. We are now still in a minor level of support. Again, not a major level. And for me, for a good entry, I want to see a nice bullish engulfer, a candle that must engulf the previous candle, including the wick as well, which is really important. And with that, if we have an oversold situation in the RSI with bullish engulfing pattern, that will be a valid buy signal, aggressive entry. But if you are not an aggressive trader, look for double bottom entry patterns. Now again, I'm going to use a low risk because it is not a major zone, it is a minor zone, but a level that has been reacted multiple times in the past. Looking at this level, that is why I'll be looking for my entry confirmation. So we have a chance after 1 to 2 ATR bounce, price hit 50 EMA, then push back down. Exactly. So do you see a bullish engulfer, and do you see an oversold situation in the RSI? Exactly how we wanted to enter. Now I have some students asking me that if it's a valid entry or not. I've already messaged them that if it's a valid entry or not, and that is how you learn. Some priority members message me on YouTube. Here every single day I talk about these entries, and if you follow me from a couple of years or a month, you know what entries I talk about. You can always email me or DM me to ask me questions, and that is how you guys will learn. I've already mentioned that it's going to be weak entry, and that will be the targets. And as mentioned in my videos, last video, that I'll be looking at 1 to 2 ATR targets from here, and then I will look for the next condition. Price might fall after hitting 50 EMA, or if broke above, we're going to look at the upside. So at this point, as the price just hit 1 ATR target, as you can see, 4 was the ATR, it hit 5 points, hitting our take profit. I did not enter this trade because, like I mentioned, I want to see a good bullish engulfer, includes the wick as well. But if you follow me, you know that is a weak signal. But again, if you have taken the risk, that has hit your take profit. Now what I personally do, keep it very simple. So at this point, I want to look for a double bottom pattern now, which is something like this. All I want to see a retest of my rejection box, and I want to see a bullish engulfer, 382 candles or a pin bar. If I have that, we will have a valid buy signal, and in that process we might see some divergence in the RSI as well, and in combination of double bottom, that will become a good signal. So if we have a double bottom without a candle to close below, this low and this rejection box. You can mark this rejection box so that you don't make any mistakes. If there is no close of the candle, and if the candle forms a condition without a body to close below this low, wick is allowed to go. If the body has gone below, in that case we're going to start to look for the bearish continuation trade. So if that condition happens, we are good to go long. Stop loss can be below this pattern, take profit 1-to-1 initially and then manage it accordingly. So this is one condition. I'll be looking at aggressive entry played out. Now less aggressive entry. If you have a pullback, in that case we're going to go long. Now let's say if there is no condition and market opens above in gap somewhere. In that case we'll still look for the pullback and double bottom condition. But if the market opens gap down somewhere crazily, then the double bottom will become invalid. So that is what we need to look at. Conditions is very important. Once we have a condition, we are good to go for our trade. Let's say if the price just pushes up and break above 50 EMA, in that case we'll have a confirmation and continuation towards the upside. Now in a process of double bottom, we might get a hit of 50 EMA and we might get a bearish engulfer here. If that happens, I'm going to take my sell trade for a little scalp till we hit this rejection box right here, exit here, look for my buy condition I've just mentioned. So that is what I'll be looking at as well. We can also look for sell trades below 50 EMA. If we have a bearish engulfing pattern, we are good to go short. I've just sent a trade alert on Friday, a bearish trade alert. Look for the exact same condition, the one I've sent in the trade alert. If you have a condition like that, and this is what I also talk about in my YouTube videos, if you have something like this, we are good to go short if that happens below 50 EMA. So these are the conditions I'll be looking at. Buy or sell trade. It is a decision zone where the market can decide either it wants to push up and continue to push up, or if we are broken below, then we are just looking at the downside. In long run, we are still not completely bearish. I know we have a weekly pin bar candle right here, but we are looking for short-term trades on 4-hour time frame. As long as we are above this zone, we are not completely bearish. Once we are broken below this zone right here, 2.307, that goes up to 2.462. Once we are broken below this zone, only then I'll start to look for my bearish continuation sell trades. Otherwise, look for double bottoms, and once your take profit is hit, very important to exit your trades and look for next buy confirmation. Once we are broken above, start to look for the pullback entry bullish. Very important to have your stop loss and take profit both, because sometimes the price hit your take profit and quickly fall back down, and our goal is to grab these jumps and pumps and pull the money out of the market. And then if the market wants to ride along with the trend, in that case we are out of the trade and look for the next confirmation. So that is what I'll be looking at this point. Double bottoms is my target. If once we have a double bottom, we are good to go long. Aggressive entry, nicely played out, and this was a zone that was also sent to members. Here on capital.com, exactly the same. Now just mark your rejection box, something like this. Now I've got a questions from members that if it's a valid bullish engulfer, if you zoom this one, this candle opened above from the previous candle. The candle must engulf the previous candle fully. The body of the previous candle must be fully engulfed by a preceding candle, which is right here. So in this case, that would be an invalid bullish engulfing pattern. But now we're in the process of forming double bottom. Now in this case, if the price won't break and close below this rejection box and come down, forms a bullish engulfer, green candle, pin bar, in that case we'll have a valid buy signal. If you have a bullish engulfer, something like this, that will be a strong buy signal. Just a green candle will be a signal, but that will be a weak double bottom. So wait for that. These are conditions I'll be looking at for the next sell trades. I want to see a complete break and close below this low. If that happens, we will start to see a new down trend. But for now, we are still not in a downtrend. We are still in the trend continuation zone. Price can still push up from here. Once we have a push up, 50 EMA, bearish engulfer will be my sell trade. Come down, pull back. If you have a buy condition, I'm going to go long. So these are the conditions now I'll be looking at. Wait and see how it goes. Once we have a condition, we're going to enter our long trade from this area, as we are still in our trend continuation zone. And that can be just a pullback in an uptrend, something like this. As you can see on a daily time frame, we had a good pullback, a double bottom pattern, price push up, pullback and then broke above this zone after the double top pattern, and the smaller time frame, that would be enough to hit our target. So that is what we need to look at. That could be a big and deep pullback before the price will push up from here. So that is what I'll be looking at. Once we have a condition, we are good to go for our trades. Look for that, wait with patience, and enter with conditions. Here on NEMEX, the zone below, which is right here, as you can see the number in blue, it is an area. If the price comes down in this area, I'll start to look for my buy condition, which is bullish engulfer or double bottom entry pattern. But here, let's say the price forms a condition on the other two platform. It might come down and form a double bottom here on the trend line as well. Looking at the NEMEX platform, the candles are not really even on this platform. So that is why we might get a move like a hit of trend line, a bullish engulfer, and price will push up from here. So that is why if I see a condition here on Ovanda or on capital.com, it will also push up here on this platform. Whenever I get a condition, I'm going to still enter my trade. Otherwise, it is a zone from where I'm expecting a push up. Now here on NEMEX, if you want to wait till the price break above 50 EMA. Once that happens, we're going to start to look for our bullish continuation trades only. So we are still in an uptrend, not in a downtrend, as long as we are above this yellow box. And again, I'm still aware of this pin bar, but as long as we are above this zone, we are not completely bearish. Next one, we have silver. Silver is pushing down, and let me show you what I've said in the last video so that I can understand conditions and entries. So very important, look for that. We have a 382 bearish candle right here. That is also one of my sell signal and a bearish pressure as well. So looking at that, we have a chance the price will push down from here. Not taking any buy trades unless we are broken above this size. So looking at that, a bearish pressure, I'm expecting a price to push lower out of silver at this point. So only looking for sell trades for silver, looking at this 382 candle. And looking at the ratio charts, we are still not completely broken below this level. As you can see, the price came back above, and the push up here is a push down on gold and silver. What a nice push down out of this 382 candle. Now, if you are my student, you know what strategy is that, and you have seen how nicely it hit our take profit exactly with our stops and target rules, and that is how we take this trade, and that was exactly mentioned in my last video. How nicely the ratio is aligning. As you can see, it nicely pushed up, and as mentioned in my last video, the price start to push down here and on gold as well. So that is what we need to look at. Ratio is bullish, and it can likely now push up to this level above, which is right here 80.16. that goes up to 82.35. so in that process, in this push up, price can likely push down from here, but in this push up, gold and silver will dramatically fall as well. Now, silver can likely come down to this level. As you can see, the double top, which I've mentioned in my couple of videos before, which is 28.71, that goes up to 29.36. Price can come down, retest, and give us a bounce, and then likely fall to the level below. So that's what I'll be looking at. We are below 50 EMA. All I want to see are bearish trades, which is a pullback, bearish engulfers, and keep on taking shots till we are in this level from where we can expect some bounce and possible trend continuation from here. So bearish for silver, not taking any buy trades, as now we are broken below 50 and 20 EMA both. Same here on gold. Now gold has formed a head and shoulder pattern which was triggered right here without an entry condition, but now we are broken below with a body. It is not a very strong body, but that could be a very aggressive entry, which is something like this. I'll keep my stop loss above somewhere 20 EMA and take profit accordingly 1-to-1 initially. So that's what I'm expecting out of gold. We can likely push down and hit a level below, which is right here 22.84. that goes to 23.04. I've been mentioning that we can likely push down to a big level here, but in that process we need to break below this level, and then price will likely push down. So that's what I'll be looking at. Nice head and shoulder pattern played out, and we are broken below the termination zone, and we have a likely chance the price will then push down. Now for the less aggressive traders, all I want to see a pullback below 50 EMA. If we have a bearish engulfer, in that case we can start to look for the pullback entry bearish as well. So bearish for silver and gold, and looking at the ratio, we are bearish for both of them. Next one, we have crude oil. Not taking any trades for crude oil. We are still ranging, as mentioned, that we can get a possible bounce out of bullish engulfer, little bounce, pullback. We can also get another bounce, and as long as we are in ranging in between this box, we are not taking any trades. So wait and see. If the price breaks below 76.63, in that case we start to look for a bearish trend continuation trades. If the price break above 80.86, in that case we start to look for the buy continuation trades. So that's what I'll be looking at. Wait for the breakout. We are just consolidating sideways. After the breakout, we'll find out what trend crude oil wants to start. Once we are confirmed the trend, we're going to start to look at the pullback entry bearish if broken below and pullback entry bullish if broken above. Wait with patience, no trades for crude oil. Lastly, we have copper. Copper has came down in the trend continuation bullish area, which is right here. 4.349, that goes to 4.564, a zone that was mentioned in my last video as well. All I want to see, some sort of bullish condition like bullish engulfers or double bottom in this area. Once we have that, we are good to go using one ATR for the initial targets, and then you can manage it accordingly. So I'm now expecting some bounce, and then we'll see if the price wants to continue to push down, or if it wants to push up, it must break above 50 EMA after a bounce. So for the bounce, I want to see some sort of bullish condition. That will be a bullish engulf as a double bottom or 382 candles bullish. So that's what I'll be looking at. We are now in a buying area. After the condition, I'm going to enter my trade, but conditions are really important. So that's it for commodities, guys. Hope you're getting value. If yes, hit a like button for me, subscribe if you're new so that we can all trade together and trade efficiently. Hope you trade green. I'll see you guys in the next video. Have an awesome weekend. Take care.